welcome to DCAP Studios. I am Jared Lutz, and this is Ben. Ben, how you doing today, bud?
Not too bad. How about yourself?
I'm doing pretty well, man. I mean, it's San Diego. It's like, how could you not get better than San Diego? It's the best.
I know. I'm not too bad myself in Orange County, a couple of hours north of you.
Yeah, so far, and so limited to get there. No, yeah, but I'm stoked that we're talking today. It's been in the news. This BCG report that came out. It's got our team pumped up, right? Because we're in asset tokenization, but the report comes out from BCG, which is one of the largest consultancy companies in the world, and they're saying that they're expecting $16 trillion on the low end to be tokenized by 2030. Of course, for a tokenization company, this is like Christmas. This is the biggest news ever, right?
Yeah, that's pretty good social confirmation that we're on the right track. Yeah.
Yeah, absolutely. But when I got super excited and I started sending it to like everybody I knew, it became clear talking to them that it is a very dense report and there's a lot of stuff that you kind of have to go through and digest. So I thought it would be awesome for us to get on this call and sort of break down the report and how it's going to benefit really anybody getting into asset tokenization.
Yeah.
Yeah. So at the beginning of the report, it talks about how we are in, the global markets are just kind of, I don't want to say melting down, but there have been significant losses. We've got Bitcoin since last November is down, at least as cited in this report, down 70%. Ethereum is down 75%. And this report came out in September, so just last month. But it's not all doom and gloom. It's not all bad news, right? They cited that when looking at development, so the developers across blockchain projects, that it essentially hasn't moved, like it is steady.
Yeah, which essentially means that, going into a bear market, obviously a bunch of companies are failing, getting liquidated, but seeing that the developer side of things is keeping stable means that they are all going into more viable projects. And it's specified here blockchain viable blockchain application projects. And I think it's important to make the distinctions that we often talk about, you and I, about the difference between blockchain and crypto and how they're often confused for one another.
Yeah, no, that's one of the bigger hurdles that I see us getting into with real estate syndicators, and past that, really just like the market in general, who perceive crypto and blockchain to be the same thing, and they're not, right? One is a technology, and the other is a coin or a token that's built on that technology, right? So often the blockchain coin is used as gas or as payment to transact on the blockchain. And then you've got a lot of people who will create tokens from smart contracts, and those are more like digital assets. So that's very different than like when you see in DeFi, like all these tokens that are exploding in growth and then just die down. That's not when we're talking about tokenizing an asset. That's not what we're talking about. That the asset that we're tokenizing is it's pegged to the token is pegged to the asset, right? So the token would only be as volatile as that asset, as the underlying asset is.
Yeah, and so I think, like, kind of how you put it, tokenization is just a fractionalization of an underlying asset. Fractionalization is something that already exists, so we're not reinventing the wheel here. We're just like making something that's already being done, but better, which is what technology is supposed to do.
Yeah, and in this report, when they're talking about asset tokenization, and they're talking, this goes kind of like dialing back here, but where they're saying when the markets are low, and then we're not just talking about crypto markets, we're talking about all markets, all financial markets are low right now, then capital is strained, and so it's going to flow to viability. In the one area that they cite in this report that seems to be the most viable, because they don't talk about anything else, is asset tokenization. And then they dive into really understanding the need of it, their key expectations with it, defining what it is, and the distinct advantages of of the asset in or of the technology, and then the proliferation. So let's just dive right in and start talking about the need of it. And what always tops every list that we come across is liquidity.
Yeah, liquidity seems to be the big one. Obviously, this report talks about all kinds of assets. We specialize in real estate assets, so liquidity is also something that's going to speak to real estate syndicators and investors, because I mean, as in syndication, typically you're locked into these contracts for like 5 to 6 years. Um,
And I think we're going to see that's going to be a lot longer now
mhm,
that the real estate market is also taking a hit.
True.
So, because they're not going to want to sell the asset at a loss, of course.
Yeah, and like the current alternative to that is what we're just talking about, like fractionalization already exists. So we have that with real estate investment trust with the REITs. So
Yeah.
those
So
are
in
affordable.
public markets,
Yes, on
right?
public markets. Yeah.
Yeah.
And so those are affordable. Those are very liquid, just like a stock. However, the problems with them is that you actually have the investor has no ownership of the underlying asset, so there's no tax benefits whatsoever on it.
Yeah, and when we're talking about liquidity, right? The in a survey that was conducted, it cited that 56% of assets held by taxpayers with a net worth between 600 and 1 million were completely illiquid. So they were tied into private placements or private equity funds, or real estate funds, however it's structured. They were tied into that for X amount of years, and if that person wanted to get out of it, they weren't going to be able to do that, or it wasn't going to be difficult, or it wasn't going to be easy, right? And so with that, I mean, of course, like that's going to be one of the biggest needs in this industry, in advantages that tokenization is going to be able to offer, from all sorts of ranges, not just from making it easier to go to buy an asset or sell an asset, but also opening up who can come into it, making it easier for international investors to come in. It just across the board brings in more money and more affordability.
Yeah, so
And
so there's a bunch of obviously of features that tokenization adds to what's already existing, and they're all kind of intertwined in some way, like they're all enabling one another. Liquidity is probably the biggest one. I think the second one, which enables liquidity and is enabled by liquidity and by blockchain technology, which speaking with syndicators seems to be like a huge deal, obviously, is streamlining and automation in general.
mm,
One thing that's one of the reason why there's such a high ticket of entry to real estate investment and syndication is because, I mean, managing thousands of investors, like with all the paperwork that's required, is absolutely hellish. It's a nightmare. So obviously having a high ticket price really filters down the amount of people who are going to be able to enter those investment pools, and so there's a lot less of individuals to manage. With automation, that's no longer a problem.
yeah, that in fact, a syndicator that we were interviewing last week said just as much. She said that it's not that it's not worth it, but it's much easier, of course, to deal with 40 or 50 investors than it is to deal with 1,000 investors. So you set the minimum at 100,000 or 250,000, whatever it is that the syndicator wants to set, and you make it harder for people to get in, but make it easier for the syndicator to manage, as you were talking about. This kind of takes all that away, right? Like where from the execution of the legal documents, entity creation, to distributions, and then on the investor side, diversifying those distributions can all be automated, and it makes it significantly easier to operate in that capacity. So now you don't have to have a high ticket item of 100,000 or 250,000 or whatever it is. You can really open that up to more investors, which is going to bring more liquidity.
Yeah, and from the syndicator side, everything is programmable as well, which I know was a concern for the syndicators you interviewed, like from Class A, Class B shares, who can vote, who cannot, and who has access to who can view like what's been voted on and all that stuff. All of that is programmable,
Mm.
and then everything is automated.
Absolutely. Yeah. So it's through and through just a level up on technology. And I think that's one of the things that we really are. I think what this report is saying, more data driven, but that this is just, it's just leveling up, looking at how the SEC. So we talked to a lot of lawyers, obviously, and because this is such a regulated space. And from a lawyer's perspective, there is, when you're talking about tokenization, the SEC does not see a difference between tokenizing an asset or holding paper, right? It's the same guidelines, it's the same framework that we have to work within, and that framework can be coded in. So on the compliance side, it's safer. We're just leveling up the technology. We're digitizing shares of ownership, and and it doesn't need to be overcomplicated beyond that, right? I mean, that's our opinion.
Yeah, and I mean, like you nailed the nail on the head here. Is that is that it's we're not inventing anything. It is just like taking ownership, like shares of ownership of one asset, and just digitizing that. It's
Yeah.
just it's the same thing. Instead of a piece of paper, it's on a program, on a software somewhere.
Yeah, and now going, into the potential of where BCG says this is going. I got drawn into it. I mean, I was going to read this thing regardless, right? Because it directly relates to what we're doing here at DCAP. But I got drawn into it when I saw 16 trillion. I was like, oh my gosh, 16 trillion by 2030. And then I get halfway through this, and they're like, yeah, that's on the low side. A best case scenario, 68 trillion by 2030, and I'm blown away because their data is telling them that essentially the majority of business is going to be tokenized by 2030, which is 7 years from now. And I'm even more blown away when I'm seeing that there are only a handful of people who are doing this, right? They only cite 11 companies that are doing this, two of which are specialized in real estate and have never tokenized an asset. The other nine, they're just more generalized in tokenization. And of those, there's two that have an end-to-end solution, which was really important for DCAP. It was important for us to provide a unique customer journey for specifically for the real estate side, and to be end to end from entity creation to tokenization to primary offering, secondary offering, to custody, to be able to do all the legal agreements, the KYC, the accreditation, to provide a customer journey that didn't require them or the syndicators to leave the platform,
Well,
right?
and out of those 11 players, like it's not like they took like the 11 biggest players. I mean, they did, but we have like here, examples of people with like roughly $1 million in funding with teams of under 10 people. So we can see here clearly we are just at the genesis of this market here.
Yeah, I had a guy reach out to me on LinkedIn, and he was saying, hey, you guys have one of the best go to market strategies in the US for tokenization companies. And I was like, oh man, I appreciate you saying that. That's awesome. But, there's like two of us. So it's not that much going on. It's a wild, just for us to be in this position, and to have this opportunity for DCAP to be positioned while the world is sort of moving in this direction is kind of like a pinch me type moment. It gives me chills every day, and it also makes me really just drive as hard as I can to accomplish the goals that we have.
Yeah, we got to speed up.
Right. Yeah. So let's just let's cap this off with talking about, and we did go through this a little bit, but the distinct advantages that we see here, or the proliferation, the evidence of proliferation, which they do cite in this article. I mean, we did cover a lot of this already, but improved affordability, allowing more investors to come into it, borderless accessibility, really automating the process of getting international investors through the Reg S. We've got unlocking liquidity, which is going to come with just having more users on platform. How the smart contracts and the blockchain technology really enforces transparency and accountability,
That's a
right? So
huge one
like,
for private markets. That's a huge one for due
absolutely.
diligence for both the investor side, for them to be able to kind of like, see what's up with the asset managers and, their history and, the viability of the deal. And from the other side as well, like for the asset managers to verify KYCs and all of that, it's a pretty big deal.
Yeah, I think you actually mentioned something really, really critical there. I want to highlight even more, which is the due diligence on the fund manager side. I see a lot of talk about the due diligence on the investor side because that's what the SEC requires. But I don't see too much conversation about doing your due diligence on the asset manager and the lead sponsor and all the co-sponsors for the syndication, which is really important because they're the ones taking the money, structuring the deal, managing the property, and to be able, with our platform, and others, I'm sure, like to be able to see the data behind that person if they've been operating on platform would be huge. It would tell you how they've managed deals in the past, how those deals scored, what was the return for the investor. This is obviously like years out because like you have to have all that data on platform already. But that's where we're going, right? In providing that very easily to provide that due diligence side on the investor or for the investor on the fund manager
Yeah, for sure. That's a
because it's
that
you know
that's a
it's not talked about.
that's a big one. And then I guess the last one we mentioned before was just streamlining and automation is probably going to be like pretty big for especially on the asset manager side of thing, because obviously the investors, it's they don't have as much admin work to deal with.
Yeah, no, which gives them more time to manage the property or do what they can to address any issues that they see happening, right? So the less admin stuff they have to do, the more, I don't want to say real work, but more actionable work it opens up for them. So that's definitely something that should be noted for streamlining those transactions. So we've got some challenges right ahead of us. We talked about the education component, bringing awareness, sh- showing people, teaching people that that crypto and blockchain are not synonymous, that they are different, is going to be huge for us. Just in general, educating and creating awareness around tokenization and its benefits is going to be a little bit of a hurdle, right? Because it is a pretty complex subject. And so, but we invested a lot in building out a studio to produce that high quality content so that we can create, you know, high quality content for people to consume.
Yeah, I mean, every technology is up against it. People tend to be a little bit risk averse, and new technology is change. Change is more than likely uncomfortable, so it's up to us to make it as seamless as possible. I think most people that have kind of an understanding of what's going on with blockchain technology and with these markets and what tokenization is are pretty adamant that, well, this is the future. It's just a matter of like providing an experience that enables that and removing as much of barriers of entry as possible. I mean, I know you like to mention, like, when we make an upgrade or an update on an iPhone, we don't necessarily read all the technology that's behind it. We just read that it's your phone is safer against hacks. That you're just like, okay, well, let's do that. And same, I mean, objectively, e-commerce is more practical and less time consuming than going to a brick and mortar store. However, like, uh, not that long ago, it was crazy to consider putting your credit card information onto a browser, and
Yeah.
now it's like common practice. It's a browser extension. People have their credit card recorded on their Google browsers.
Yeah, no, absolutely, and that was a process that we had to go through with new tech, and that there was a lot of just that those bad actors and garbage in the industry early on in the '90s, and and they had to create a regulatory framework around that. What's good for us is that they have to do that in crypto. They have to create that regulatory compliance around crypto mostly, whereas the blockchain technology enforces that. What's good for us for people getting into tokenization right away is that that framework has already been created for us. That the SEC, like I mentioned earlier, just before, doesn't see a difference between digitizing a share and owning a paper share. It's that framework is created. We put all of that compliance inside of these smart contracts and inside of our platform to ensure compliance across the board, both from the investor side and from the co-sponsor and lead sponsor side. Right, so that's going to be huge. If you guys haven't had a chance to read this report, we're going to drop a link down below, and I definitely recommend, especially looking at the proliferation side and seeing the digital asset trading volume that has been exploding as of recently, that the stakeholder sentiment and the pilots that have been done across multiple countries has been super strong. It's being recognized by monetary authorities. More asset classes are being tokenized. We're talking about crops, strawberries, exotic wines, whiskey, art. This isn't just real estate, right? It's a lot of stuff. And just the talent pool of developers coming into the industry is growing rapidly. You got to check out the report. And if you like our content, you want to learn more about tokenization, come check us out on Discord, and subscribe to our YouTube. Ben, I appreciate you stopping by, man. I can't wait to discuss more of this with you in the future, and just do our job to educate people and create awareness around tokenization.
Yeah, pleasure was mine. It's an exciting time for us, so I'm eager to get back to work.
Awesome. Well, let's do it. All right, take care, man.
Yes.